Welcome to Iraqi Dinar News, your trusted destination for the most reliable updates on Iraq's economic transition and the evolving role of the Iraqi dinar. In today's report, we examine the active steps Iraq is taking toward monetary reform, digital transformation, and broader integration into the global financial landscape. As key reforms take shape, it becomes clear that a major shift is in motion, though not without resistance from elements seeking to maintain the old order. The Central Bank of Iraq continues to move forward with its long-standing plan to drop zeros from the currency, a reform aimed at simplifying transactions and boosting confidence in the dinar. This process is still facing pushback from those involved in illegal financial dealings and black market currency trading. These groups have a vested interest in maintaining the current system, which allows opacity and manipulation. Despite this resistance, Central Bank Governor Ali Mohsin Al-Alakh has reiterated that the project remains active, with efforts steadily increasing to reinforce the dinar's value. A central message from the CBI is that the strength of Iraq's currency isn't solely dependent on individual use, but is grounded in the nation's deep economic reserves and future potential. With high-level support from Prime Minister Mohammed Shia al-Sudani, the campaign for currency reform is receiving institutional momentum. Prime Minister al-Sudani recently declared that the Iraqi dinar will rise in strength, even surpassing the US dollar in the long term, a statement that reflects Iraq's broader vision, not just rhetoric. One significant decision reaffirmed by Iraq's central bank is that it will not be changing or expanding its current series of currency notes. Denominations like the 25,000 dinar bill will remain in circulation, while the 50,000 dinar note is being preserved for large-scale commercial purposes. This policy is in line with the overall strategy to restructure the currency system without causing new inflationary waves or weakening the existing value of the dinar. In another pivotal development, the Central Bank of Iraq recently welcomed a delegation from the European Bank for Reconstruction and Development. These discussions represent growing financial diplomacy and focused on several objectives: strengthening the banking sector, increasing financial transparency, and pushing forward the adoption of digital tools like artificial intelligence and data analytics in Iraq's monetary institutions. These tools are essential for better supervision, faster service delivery, and cutting through the inefficiencies that have long plagued the country's financial system. Support for Iraq's financial overhaul is not limited to regional actors. On the global stage, prominent institutions such as the International Monetary Fund, World Bank, U.S. Treasury, Federal Reserve, and the United Nations are playing active roles. Their assistance includes technical know-how, regulatory advisory, and logistical frameworks, all designed to guide Iraq's shift toward a fully modernized banking infrastructure. Within Iraq's own borders, the Ministry of Finance has also stepped up its efforts. In a recent strategy session with leading state-owned financial institutions, including Rafidain and Rashid banks, as well as representatives from Ernst & Young, detailed plans were discussed to push banking modernization forward. These talks covered a wide range of critical updates, from reconfiguring savings and loan systems to evaluating overseas operations and aligning all core procedures with global compliance benchmarks. Parallel to these efforts, Iraq is working to revamp the legal underpinnings of its digital financial systems. The release of Gazette Issue 48/26, dated May 19, 2025, marked a notable shift. The new directives enforce regulatory provisions under Article 28 of Law Note 78 of 2012, which governs electronic authentication and data exchange protocols. This legislation is essential for ensuring secure, verifiable digital communications using tools like smart cards, encrypted keys, and advanced digital identity frameworks. These legal advances are especially important as Iraq moves closer to launching its own central bank digital currency. The proposed digital dinar is positioned as a foundational step in the country's digital transformation journey. According to statements from the central bank's leadership, Iraq is fully prepared to roll out its CBDC once all regional and international agreements are in place. This transition requires buy-in from global financial bodies that continue to guide and monitor Iraq's progress. The country's modernization efforts are also accelerating under new government directives aimed at tightening reform deadlines and meeting all modernization benchmarks. Iraq is now actively revising the list of officially recognized electronic services and technical systems to ensure full regulatory coverage. These updates are part of a broader blueprint to position Iraq as a secure, digitally compliant economic player on the world stage. As part one of this report comes to a close, it's clear that deleting zeros, digitizing banking systems, and implementing a central bank digital currency are all tightly coordinated elements of Iraq's larger economic vision. These initiatives are not just about changing how money is handled, they signal a deep, systemic realignment toward economic strength, accountability, and international cooperation. As these transformations gain traction, Iraq's emphasis on digital integration is becoming the backbone of its economic renewal. The CBI's proactive approach is not just modernizing the banking sector, but also setting a new financial standard that is secure, trackable, and free from manipulation. A major part of this evolution lies in leveraging technologies that promote transparent data handling, fraud prevention, and customer identification systems that meet global standards. While the technical groundwork is being laid, public awareness and market adaptation are also key elements of this transition. Iraq's financial institutions have started pilot programs and educational outreach to guide citizens and businesses in using digital payment systems, mobile banking applications, and secure authentication platforms. These efforts are meant to build public trust and ensure a smoother nationwide shift from cash-based transactions to digital platforms. At the heart of these financial reforms lies a deeper strategy to re-anchor the Iraqi dinar as a trusted store of value both domestically and in the eyes of global investors. The deletion of zeros initiative, often misunderstood by the public, isn't meant to devalue the currency or cause confusion. Instead, it's a recalibration process designed to streamline monetary policy, reduce transactional errors, and align Iraq's currency presentation with international standards. This clarity is crucial, especially as Iraq positions itself to attract foreign capital, enhance bilateral trade, and restore its credibility in the global markets. With ongoing dialogue between the central bank and international partners, Iraq is building the scaffolding for a stable financial future, one in which the dinar plays a central role, supported by policy, regulation, and trust. Recent comments from officials in Baghdad reveal just how serious this effort has become. Behind the scenes, there's increasing urgency to finalize agreements, update banking codes, and ensure that all institutions, from commercial banks to credit bureaus, are aligned with Iraq's new economic model. The message from leadership is simple. This is no longer a proposal, it's a priority. Although some have speculated about delays or internal disagreements, the continued presence of international observers and consultants suggests confidence in Iraq's direction. When asked about the timeline for full implementation of the digital dinar, CBI officials remain careful not to overpromise. However, they have indicated that technical infrastructure is nearing completion and legal frameworks are now active. The next stage will involve rolling out initial digital wallets, testing real-time settlement systems, and finalizing consumer-level integration. The broader implications of this transformation could be profound. A stabilized dinar, paired with digital efficiency, opens the door for Iraq to reduce its reliance on foreign currencies, particularly the US dollar, in everyday transactions. This aligns closely with earlier remarks by Prime Minister al-Sudani, who emphasized national sovereignty and economic independence as key goals of the reform agenda. While some may view the statement that the dinar could one day be stronger than the dollar as overly ambitious, it reflects a mindset that is focused on self-reliance and reclaiming financial dignity. Whether or not that milestone is reached in the near term, the journey toward a stronger, more respected currency is well underway. Even former President Trump's administration once acknowledged Iraq's vast economic potential, particularly due to its untapped energy reserves and young labor force, factors that still hold weight in current global evaluations. The role of U.S. institutions, particularly the Treasury and Federal Reserve, cannot be overlooked. Though not always publicized, their advisory role in stabilizing Iraq's foreign reserves, enhancing anti-money laundering procedures, and supporting currency auctions has been instrumental. These partnerships, combined with Iraq's renewed legislative push, form the backbone of a broader global alignment that favors Iraq's reintegration into the international economic community. Meanwhile, the implementation of smart contracts, digital auditing tools, and real-time transaction tracing will drastically reduce the scope for corruption, embezzlement, and fraud, chronic problems that have historically hindered progress. These innovations will serve both as economic tools and trust-building mechanisms to reassure citizens, investors, and international allies that Iraq is finally turning a corner. It's worth noting that these reforms are unfolding at a time when global financial systems are themselves shifting. With many countries exploring central bank digital currencies and blockchain-based settlements, Iraq is not late to the game. It is, in fact, entering at a strategic moment. If implemented correctly, the digital dinar could serve as a regional model for how oil-rich nations can harness digital finance to support national development goals. As momentum continues to build, the CBI is expected to release new guidance on the phased introduction of digital currency systems, starting with interbank transactions and moving toward public use. Stakeholders will be watching closely for timelines, pilot program results, and updated metrics that show measurable progress. In closing, the changes underway in Iraq are not temporary or symbolic. They are foundational. From the removal of zeros to the digitization of its currency and the realignment of its financial infrastructure, Iraq is pursuing a transformation that could redefine its place in the world economy. The journey won't be without obstacles, but the direction is clear and the stakes are high. Thank you for staying with Iraqi Dinar News. Make sure to subscribe for more timely insights as this story develops. Your engagement helps keep the light on these crucial reforms that could very well shape Iraq's financial destiny for decades to come.